Are you an online educator struggling to find your audience? Quasar Markets connects you with learners looking for you. Keep 100% ownership of your courses. No hidden fees. Already have monetized content? Get paid again and again. Apply today. Take control of your educational empire. Quasar Markets, where educators build their legacy.
Good morning, Quasar Markets Live, and good morning, BigBeat. How you doing today, my friend?
You know, it's a bullish day, bro. I've said this for the last 3 weeks that, hey, look, any good news will change the terms here, and we're going to go straight up. We're seeing that, right? I mean, we're living headline to headline, and it sucks because I like my charts, but the charts are worthless. I mean, you keep saying, people keep saying, oh, but here's where the buyers and here where the sellers. Yeah, I know that, right? I already know that. But you know what I know more than anything is what's really happening out there. A couple of things I want to talk about this morning. Number one is McDonald's. You and I have been talking about Mickey D's and Wendy's and these fast food restaurants, and they're gonna starve during this, pun intended, during this moment, right? As Eli Lilly and Novo Nordisk fight out the whole thing with weight loss drugs, and there it is. So. Look, here's the next level of this. And when we look at it from the perspective of McDonald's, it's also changing customers' habits, right? What they're doing, what they're watching, and what they're seeing. And are they staying home? Are they getting more active? What are they doing? And I think we want to talk about the day. I think you have some earnings we want to talk about. But today is a bullish day. Yeah, I get it. Apple missed on earnings a little bit. Not really. They beat, but I get it. Guidance was bad because of tariffs. I get all that. But we have some good stuff, too, out there. Just think, 73% of the companies out there have beaten on earnings, even in a bad time. So, yeah, I'm okay with this.
Absolutely. And we're looking good so far this morning. Tick up about 400 here. Advanced decline close to up 3K. And both the SPY and the Qs up over 1% as we get ready to open. Good to see that. And that's coming off some not such great earnings. I mean, Apple had good earnings, good EPS beat. But they definitely made it clear that it is not as easy to move a entire production line as the president would tell you.
Yeah, I mean, he I'll tell you what I liked about it. President Trump made a right move. He says, you know what I'm going to do? I'm just going to call Tim Cook up on the phone. Wow, that didn't happen in the previous administration. So he picked up the phone, he called Tim Cook, and he said, Tim, I want you to move your manufacturing in the United States. He goes, Mr. President, I would, but it's too expensive. And he goes, I'll tell you when I will do it. When robotics has that special arm that can make phones for me very fast, then I will do it. Because you know what?
I don't have to pay people, and I can use computers.
Yeah,
absolutely. Apple had a 5% beat year over year on their revenue, an 8% year over year beat on EPS. iPhone revenue came in a little light at $46 billion. Service revenue, though, hit an all-time record high at $23.9 billion. And again, China revenue is where they're getting.
They're hearing reports right now that NVIDIA says that they are tweaking their chips, their AI chips, to be sold to China. Wow. Hey. I've been saying that it's all about NVIDIA, right? So.
Yeah, that's one that actually scares me, because then the president's going to say, well, that one scares me a little bit more. Unless they've already got assurance that what they're going to do is going to not be the next chip to be banned from China. Because if all you did was change one thing or two things, and now you think you're going to sell it to China, this administration is not going to have that.
They're just saying that they're tweaking their AI chips after the U.S. export rules. So yeah, they're just making it so that the Chinese can handle it, right? And I think there's some onboard software that's saying, hey, you know what, we can follow what's going on. I agree with that. The security issues, I don't want somebody in my NVIDIA chipset from China playing with my computer, right? So I understand that, and vice versa. They don't want that either. Okay.
Well, but if you don't, then you just give more wings to Hawaii to become bigger and bigger and be a real competitor to these other company.
Well, Huawei has a lot of issues, right? I mean, they are well known to being a company that sticking their nose in all of our computers, and we don't want that, right? So their security issues are very, very high, and that doesn't fly very well here in the States.
No, it won't matter here, but it will matter in China.
Yeah.
Again, we're talking about China and what they buy for chips. I think their appetite for NVIDIA is decreasing by the day that they can't get them, and they have to learn to move to their own. So you got to make that up at some point. Amazon, another one. Amazon had a nice move to the upside. Has pulled back a little bit, but up another 1% this morning. Again, 9% year over year increase in revenue. Their net income hit $17.18 billion, and their AWS revenue was slightly below expectations, but up 17%. Advertising revenue came in up 18% there, Steve. Forward guidance, they gave Q2 revenue projections of 160 to 164 billion. Operating income somewhere between 13 and 17.5 billions. They did say the potential impact from the 145% tariffs on Chinese imports, which are over 60% of the e-commerce sales from third-party sellers sourcing from China. So getting hit a little bit harder this morning than they were yesterday, pulling back a little bit, but trying to get a little bit of steam going here. Again, everything there looked pretty good to me, sounded good. I love what their advertising revenue continuing to increase, moving to the upside. So that definitely looked good. On the downside, our friend Jack Dorsey, Square or XYZ Block, whatever you want to call it, they missed estimates on revenue. They were well below their EPS estimates, although they did have a 9% year-over-year growth in gross profit. And they revised their growth forecast down from 15% growth to 12%, getting hit pretty hard here. They were down almost double digits last time I looked. Let's see here. XYZ down 22%. Never mind, double digits. So Block definitely getting hit hard here.
There are reports that Yemen Houthis now have claimed responsibility for a second missile launch towards Israel.
Chevron, another one in the earnings here. Chevron CVX. They missed their estimates on revenue, but beat their EPS. They're doing about 3.3 million barrels a day, Steve. Is that good, bad, indifferent?
Well, oil, there's a couple things going on, right? President Trump, again, calling out Iranian oil. That anybody who works with Iran, we will not allow you to do business with the United States. That's very saber rattling towards Iran. When you look at it from that perspective, because Iran makes a lot of oil. OPEC, the rest of the OPEC countries don't really like Iran. They wish they would just chill out, but they don't. This is what happens when a country goes nationalistic, right? Iran might be the most nationalistic country there is, except for North Korea, maybe. There you go, right? And you're closing your borders off. That's what Iran does. This is exactly what's happening, right? So, $59 a barrel, 59.24 as of right now for spot. Looks like the futures for the month here now is 59.24, still under 60. So that's recession era. So I'm not liking this too much. Oil needs to get above 60, 61.
And I will say most of the stocks being hit the hardest today, Team, which is Altation, down about 10.5% this morning. Across the board, you're having a little bit of slide back.
Let's talk about that a little bit. Atlassian, and we use Atlassian here at Harris. And when you look at companies that'll be legacy companies, right? I've said this in the past, and I'll tell you, I saw Mark Zuckerberg talk about this 2 days ago now. 34% of all code today is now written by AI. He said that in 5 years, 99% of all code will be written by AI. Well, that's what Team does, right? Atlassian is the company that, for the most part, handles the code flow and how bugs and things of that nature. Unless Atlassian changes their tune and how they work, they're not going to be around. Look, there's a lot of legacy companies here that's going to have a really rough time with AI in the future, right? And it's one of those things. Will people be going to McDonald's in the future? That's what investing is about. Investing is not about, I can't wait to put money into something that's old and a stalwart. That's great if your grandpa's investing, right? You're investing in Bethlehem Steel, but we're investing in the future. And you need to talk about the future companies and what future companies are doing are they ahead of the game? And if they're not, because when you invest, again, it's what? It's mispricing or pricing of stock. So if you think that they're producing something that's going to be good in the future, that's what you're investing in, right? And I don't think that Atlassian is that company.
Nice. There you go. Next up, you have Airbnb. Their profits, revenue was up, profits down. U.S. demand is soft in general. We know they're under, some issues in New York City and other places that don't want them in there. Down about 2.87. Revenue was still up 6% year over year, but their net income was down 42%. They are looking at moderation in nights and experiences booked. And again, U.S. market softer demand attributed to broader economic uncertainties. So Airbnb getting hit pretty hard here this morning. Also, on the other side of that, you got Reddit. Reddit had some nice earnings overnight. I got their info. Reddit. Here we go. They crushed it. They're 61% up year over year. This one surprised me. I didn't realize Reddit was still doing this strong. Revenue up 61% year over year. Net income is now moved up from 13 cents a share to $8.19 a share. Gross margins 90.5% versus 88.6% a year ago. Q2 guidance 410 to 430 million in revenue, which was 392 was the consensus. So again, very strong by Reddit. This one sort of shocked me personally.
It does not shock me at all. People are going to Reddit and they have, that's their place of screaming and yelling, right? And I think that's what's happening right now. So they're also charging for their APIs at Reddit. To figuring out what people are saying on Reddit. Look, the world there is changing because it was a free service. Now it's not. Now that it's going to all revenue. That's a different world now, right? So, yeah, I don't see Reddit changing. I think Reddit's a good company in that aspect. I don't like the social aspect of Reddit. It's just a lot of screaming and yelling, and it's turning into 4chan in a lot of ways. So I back off of it when I look at it, but I also think that Reddit's doing a good job monetizing their users. I do think that they have a lot of bots in the Reddit system. And I do think that there are people that are just, hired guns to just cause controversy. And that's what brings up Reddit's excitement in there. And that's what we're trying to get away from. So, I like their numbers. Looks like Bitcoin's having trouble with that 97,000 handle again. It's really, 97.2. We were having trouble at 95.
2 days ago, you were bitching and was having trouble at 95. I'm not going to bitch if something goes up 2% and has trouble again. NVIDIA went up 2%. It's having trouble again. You're not mad about that?
Yeah, no, and look, it's what we're looking for is those areas, right, of where the buyers and the sellers are, right? And so, I want to know where those trouble places are. And it's not just charting, right? In this case, I think it is actually. I think it's based on tick data. They're watching it very tightly, especially they're watching the MACD on it on the 1 minute chart, by the way. But I do think that there's the world of zero DTEs is taking over here on Friday. So I would be very careful at this market. We might have seen the top of the day actually.
Oh, wow. Okay. Yeah, I don't know. That just changed your tune in the last 15 minutes because when we came on, you said today was going to be a great day. Great day.
It is. I think for those of us who are taking some profit here, I think, look.
Okay.
Look,
I mean, obviously you want to play the hand in front of you. That's what's important.
NVIDIA at 114.
I don't know. I think that, the jobs numbers were good this morning. China's looking better. Everything is looking better. So I just think that right now we go into cycles, and the cycle right now is the fact that, he's playing 4D chess again and all this crap. And by Monday or Tuesday, we'll be back to none of this is working and everybody hates us. So, that's the game that I'm looking at personally. Again, it is based mostly about the news out there. And for every article that comes out that says we're coming out of everything, there's another one that says, well, you know, we are, but then this is what we're going to run into next. You know, that we're going to see the next set of capitulation when people start going to the grocery stores and things aren't there. And some of that stuff that hasn't really hit yet from the tariffs that will hit here and there. My concern, Steve, I got one to throw left field at you. I'm worried about the Middle East. You know, as a Jewish person, I don't like what Israel's doing. They are cutting off 3/4 of the Gaza Strip. They're isolating these people and starving them. And I have a problem with that at this point. Somebody needs to step in from the world stage and try to get that back on track. I got to be honest. So I think we're going to start to see some of that seep in too. I think you're going to start to see more unrest around the globe based upon the Ukraine isn't moving forward right now. The Middle East is not moving forward right now. Rhetoric with Iran, if anything, is picking up, like you said. So, you know, that's what worries me. The news cycle is just, you know, it's what's hot for the next 24 hours. Right now, it's everything is moving up. Everybody on CNBC's thrilled. Everybody on Bloomberg's thrilled. Everybody's pointing to the, you know, the upward direction. That usually worries me the same way that you guys get worried when everybody's so negative that, you know, that boat's going to turn. You know, I worry that do we get, you know, another capitulation here from the upside, you know, from the retail side. I think institutions are still buying and happy to be buying. You know what I mean? As I do think that is the case there. I wonder about retail.
Yeah, I mean, a lot of people are worried about retail, and I've said this a lot. You know, look, I'm watching the dollar. I'm watching the Dixie here at 98.
Which did jump up. I got a nice little text from our man, Mr. Flanagan, yesterday saying, hey, do you see that? And although it is back below 100 now, so it's retraced almost all of yesterday's gains. So we will have him soon to discuss that. But he was talking about the blow off top yesterday, which I agreed with him. Was looking very strong. I didn't notice already this morning that it has completely retraced almost all of it. That's a little concerning there for me. That gives me a little worry here. Now I'm starting to see some things that maybe you're seeing in there that I didn't notice so far. I had a little bit of a late start here today. So yeah, that does have me a little bit worried. The other thing that got me a little worried is when the tick's up this much and advanced decline is, again, that's when you get some profit taken, right? You're 3,000 now before the cash open. That means it's going to move probably up towards almost 6,000 to the upside. And what we tend to see is algos then start to play around, right? And then we see that. But I do think everybody is very positive today on everything except for crude, man. Crude is the one that has to have you worried too, right, Steve? So what does that mean on, you know, everything that's going on? Because everything else, all the other numbers have been really good this week in general, right?
Well, I think we're back to the same point, right? Trump is talking about, dear Fed, please lower rates. Thank you. That's it. And he's right. They need to lower the rates. And the Fed just got firepower again because the jobs numbers that, you know, people are losing jobs in huge amounts and a little bit of jobs in some other places, right? You can't balance it out right that way, right? If you lose people making good money and you hire people that are making lower wages, it does not balance out, dear Fed.
It doesn't balance itself out, and that's what you're seeing. I have to ask you, Steve, I read a really interesting article overnight. The one thing that I did read was talking about how we could see a little bit of a cyclical move towards Europe because of the fact that their central banks have been much more willing to cut, have already cut, and that their bond rates might be more attractive.
They are,
and show that stocks have more upward mobility because of that. I hadn't really thought about that. They think, you know, this article talked to the fact that they feel the Fed is not cutting in May.
That's correct.
And that inflation is still going to be on the forefront of their minds. And with that being said, that it's going to cause the next hiccup because then people are going to start to say, oh, crap, maybe I should have money in Europe. Maybe I should have money other places because we're the ones, because of our our central bankers causing or exasperating the issue when it comes to borrowing rates.
I mean, that's pretty much
it. I mean, that's what you've been saying. It worries me because we've been so hell-bent that they are cutting in 8 days, now less than 8 days.
I've only been saying that now for 4 months. I think one of the things that we talked about was the German 10-year bond, right? That it paid you nicely, 8-9%, and it's going up, and it was an easy win, right, for a lot of people who just held a few months, right? And you don't think a fixed income is an easy win. You think of it like the whole long term and all that, and the German 10-year has been really good. That's right. I have been banging the table for almost 2 years now about ECB and especially their, Christine Lagarde in general has been very adamant about inflation. She changed her tune. She changed her tune when Janet Yellen went out the door.
She actually did, and they've been cutting, and UK have been cutting, and that's
and look at what's going on over there. They're exploding, right? I mean, it's doing very well, and we've said that, right? I moved money to Europe about a year ago because I thought that's what the case was. Yeah.
And what worries me is I thought it was time to get it out now. I was with you when you moved it in, and everybody else, because let's face it, they had just been beaten to within an inch of their death. That it was. I sort of was of the idea that we should be cyclically be ready to sort of move back. And again, one article, and I don't even remember the analyst that did it. It just had a lot of good points that I liked that hit me and I hadn't thought of. And I said, I didn't really look at it from that. You know what I mean? And it was a different view. I do recommend, and I found it on Quasar Markets. I do want to point it out. I found it on our Twitter news, and I went down from there and I used our AI to analyze what he was saying or she was saying. And, it definitely is a case where the bond market is going to be the big decider in my mind, is that we got to keep our eyes on the bond market, because the president's going to have to at some point. And we know that his Treasury Secretary does on a very regular basis. And that's the adult in the room. So
you just took the word out of my mouth. I was going to say the adult in the room is still there, right? I get that, right? But yesterday, you didn't see that. You saw Stephen Miller and Carolyn Levitt coming out as the mouthpiece. They need to back off a bit. And
Navarro needs to be gone, quite honestly. Never mind out of those.
Yeah, agreed.
He needs to be replaced.
Yeah.
Because there's not a guy. And part of that is that, again, he has to be in lockstep with Besant right now. And he is absolutely not in lockstep. Dollar continuing to drop down here. So we are seeing some weakness in the dollar, down at 99.7 here. Again, yesterday rose all the way through the dollar, the 100 level. And as we've talked about, we like it in that 100 to 103 area. You and I, it tends to be where it's doing just good enough to prove that we are king dollar, but not dominating to where you don't want to buy gold, Bitcoin, or other commodities. So,
well, there could be some selling in the dollar just based on, because you're looking at the 10-year now, 4.285. So people are selling bonds, right? And you sell bonds, you sell them in U.S. denominated dollars, right? So when you sell them in the U.S. denominated dollar, then that selling right there is showing you. So there's that confidence in the United States is waning very fast. So.
And I also have to say that 10-year and 30-year that I'm looking at right now, both up, 10-year 1.64%, 30-year 1.3. And then what worries me even more is the 2-year up 1.76 today, is showing again what I just said, that the Fed isn't cutting in a week.
That's right. We're seeing backwardation now in the 2s and 10s. If you don't know what that means the rates on the 2s are going up faster than the 10s, and that the curve changes. We can probably, if you've got a forward curve there for anybody, we can explain it too. But when you see that, that's usually a sign of recession again, right? So, we've been screaming it
too. Is the deflationary, and what caught me was the deflationary aspect of what's happening in Europe is going to make them more attractive to our inflationary. That we're set up.
That dollar is really getting spanked right now, 99.
That's what I just said. That one hit me. That's getting hit as we're talking. So that was a little interesting there.
As my old
Steve, some great gainers in the market. 5 below, believe it or not. One of the ones I know you're not a huge fan of. I told you from my little one that I know that they're still, when it matters, they're still there. For that younger generation, they had.
Okay, so what does she like at five below?
It's inexpensive. It's perfect for that young generation that's under college. They buy their little perfumes for $5 or $10. They buy their little jewelry crap and their cheap shirts, and it's all the Chinese products. I would have to assume, but they love it, and my wife loves it because she can afford to take her there. In other words, you can go in there and let the little one pick out a new smell nice, as we call it, which is a perfume. And it's a few bucks, and it makes her happy. And they have walls of stuff to look at. The store does a good job of attracting young consumers.
And you know what?
Those kind of stores sales here. I mean, You know?
those stores will do well during this time frame. So, you know.
Yeah, and their net sales were at 967 million, above prior guidance of 905 to 925. So that's a pretty good beat overall. And again, it's a company that rebounded after a strategic reset, emphasizing product value and store experience. What I just said, I didn't read it until I just read it right there off of my AI, but that's what I saw. So it's showing what I've seen from, you know, someone that I don't go to the store. And then what it says is it's positioned as the go-to value retailer for Gen Z consumers with over 1,800 stores in 44 states. So, you know, AI did Quasar Markets again. AI answered the question you just asked. Why? That's why, Steve, is that generation that is definitely not you and I. You know, that's what you want to hear is why, you know, because I don't know. And I didn't know until I have a 4-year-old that's now in that perfect, you know, thing to go. I didn't even know what Five Below really sold. I knew it was something I didn't go into. I will mention a lot of the Chinese names moving up nicely here today, Steve. KC, which is Kingsoft Cloud, up about 5.44%. HSAI, which is Heisei Group. You have FTAI, JD, PDD, GLNG, Li Auto, Futu. All the Chinese names are all moving up tremendously today. That's the other thing that has me a little bit on edge is, you know, again, all it's going to take is one headline from either our government or the Chinese government saying, no, we don't like each other again today. And all those go poof. Tick still doing pretty well here, up 255. Advanced decline, wow, 31.50, nicely to the upside. Qs have pulled back a little bit here this morning. Now they were up as high as almost 488. Back down to 486.32 here. So like Steve said, a little bit of profit taken. Same thing on the SPY. SPY got up to 565, almost 566, has pulled back a little bit out of that 564.90 area. Any sectors or anything you're watching for, Steve, today? Or just kind of watching everything?
As I always say, tech. I mean, if you look at Apple today, that's going to be the big stalwart in the room, the big boogeyman.
You buying the dip today on Apple? There's a perfect one for you too.
I am not. Tim Cook told you exactly what the problem was. No, I think I'm going to hold off a little bit. You can see exactly why right there, Howard. That chart tells you everything. This is a place that you do need to use your charts to show you where the buyers are located, and they're not buying right now. There's no big firms out there holding.
Yeah, the buyers don't step back in until 200, in my personal opinion. There at 200, I think it starts to get interesting again, sort of like the Nvidia dips below 100. Certain things, they hit those round numbers. I think you start to feel safer looking at them. But yeah, I mean, I guess my answer, the one that surprised me is Amazon, to be honest with you. I thought that they were going to have a lot worse forward guidance. It shows you how they're moving away from e-commerce and how much AWS and their moves into other areas.
Really. Canada's Carney and Trump are set to meet at the White House on Tuesday.
Now that's big news. I like that. We've talked about it. They need to get Mexico and Canada done first, because that means we now have an alliance back in place, and as a geo block, we have a lot more, sway, so to speak, and it does make us stronger in those conversations. So that I love to say. Now, I love that today, as long as it doesn't turn into a Zelensky at the White House, then because I don't want to see that. We are open here. Let's get it on, baby. Let's go. Tick is, look at that, 5,000 on advanced decline. It popped up to, so a little less than I thought. Right to the 5,000 means there is a little bit of selling right off the bat. We do see first move on the Q, fairly flat, somewhat to the downside here. SPY's first move is actually to the upside. It looks like right here it is. It's bouncing up to start off with. Steve, VIX down at 22.74, so I love to see that. If we could get it below 20, I think that's where I think the market would really jump.
Again, I think it's based on Apple and still slipping here, down 4% here. I'm just not liking that. Boeing here up 0.89%. I heard yesterday Trump is now retrofitting a
Qatar. That's not going to go well for Boeing. We should talk about that, Steve. I know it's early in the open and we like to stay focused, but I do think that's important. I saw that too yesterday. Like I said, I didn't see much. President Trump is not happy with how fast they are making Air Force One. So he is buying a plane, a used plane, and having it retrofitted by a company not Boeing, by a secondary company. And says he's going to have an Air Force One completed by the end of the year. That's pretty big, right? When's the last time that Boeing didn't create the last Air Force One? I mean, I think you got to go back to Northrop Grumman.
Never.
And yeah, well, as a guy that lives very close to Wright-Patterson Air Force Base and loved to go to the U.S. Air Force Museum, the Pratt Whitney and Northrop Grumman made the first few.
That's
the
true. They made the first one. I think it was
all the way through Kennedy, and that's when it changed.
I think that was Kennedy's first one, right? But
Yeah.
since then, and it really wasn't Air Force. I mean, Air Force One is still the designation.
It wasn't. I mean, it was a prop plane. I mean, and well, everything was basically prop planes in those days. But yeah, if you see them, it's amazing. It is cool. I will say, anyone ever gets in, why would you ever come to Dayton, Ohio? Which I can't tell people that they generally do on a large basis. It is, though, to go to Wright-Pratt Air Force Base and go check out the U.S. Air Force. They've got actual space shuttles there. They've got the Titan rockets. They've got, you name it, they have it. It's amazing just to see. That's where I do you realize it was 66 years from the date that the Wright brothers actually flew for the first time to where we hit the moon?
Oh, look at that. History lesson, as Buffett would say.
66 years. It's been 66 years since we've gone to the moon. We haven't done much since.
And you got people saying we never went to the moon, so I don't know.
Yeah, but isn't that amazing? It only took 66 years to get from the Wright airplane to the moon. That it shows you maybe Apple can get build phones in the U.S. You said, man, Apple now down to 203.29. I think they might come right towards my 200. I actually have 198.89.
That money's going right into NVIDIA, 115 right now. 115.22, 115.36. We're off the races now.
Right.
For those of you who are listening in with us, hello, there it is.
Very nice move up there. Biggest leader on there. Duolingo, another one, Steve, up 15.22% here today after their earnings. Just rocketing. I don't know what, again, not a company that I do have a lot of knowledge of, but impressive. Is Instacart moving up nicely too? Instacart was a big beat, Steve. Were you surprised by that one? That was another one that I thought that as people are saving money, the last thing they'd be doing is using Instacart to get their groceries.
I don't use Instacart. I use when I pick up stuff, I go pick up stuff at other places, right?
I'm with you.
Yeah.
That one surprised me. And again, they just took off. I mean, I think it's a good company. I like what they do. My thing was, again, I just thought as times get tough, that's where you try to save money, right? If you used to spend a little extra money and got an Instacart getting your stuff, you then turn that around now and doing it. Advanced Decline holding up nicely, Steve. Everything's holding up so far. So we're not seeing a move really one way or the other. Sort of a do nothing. The algos aren't even funded out yet. SPY moved up a little bit since the open. Q's is basically almost exactly where it was. Dow Jones up 1.23%. RUT starting, this is where some irrationality to me too, Steve. RUT is what's up the highest today. We just looked at interest rates.
I was asked yesterday, what should I buy? Should I buy the SPY? And I said, nope, buy the Russell.
But wouldn't you be concerned? Because, again, if rates continue to go up and we're not seeing the Fed cut, they're the companies that are affected the most by that.
Because I think they're the ones because I do think the Fed's going to cut. I really do.
Okay.
Is it going to be here in May? No, probably not. Unfortunately, I think the Fed's still trying to stick to their guns because they think they know better than everybody else when they really don't. They're old people and doing old things. No, I don't, Howard. I think that I like the small caps right now.
Nice. ASTS with a nice move to the upside here today, up 12%. So space, again, as I mentioned it a second ago, moving up very nicely so far. Alibaba up almost 4% on the day. Also, Baidu up almost 3%. Like I said, Chinese names definitely move into the upside. Almost everything. Delta Airlines up 5.59%. So travel back in, definitely in play here.
We need the advanced decline lines to push up just a little bit because there is some profit taking here, and I think the algos are in charge right now.
Steve, you almost ready to buy Disney yet at 92.67 as it starts to make its way back
Oh,
up?
I buy Disney all the time. Anything under 100, I buy Disney. It's silliness. This whole hate Disney thing is silliness. The parks are just packed. People are just spending money left and right, and Disney will have a big beat. And I'll tell you, the Star Wars. I mean, I was very just disappointed in the new one, Endora. I fell asleep 4 times. I can't even watch it. And I'm a Star Wars fan, right? So I found it to be very boring.
Yeah. JD up 3.7, like I said, when it comes to Chinese names. Everything flying, though, Steve. Love to see it tick still up. Advanced decline not really moving, though. You are seeing a little bit of a climb back up by the VIX here towards 23. So we'll keep an eye on that. I was hoping to see another leg down on that, actually, not a leg up. Bitcoin struggling to break 97, as Steve mentioned, 96,769 back
Well, I
there.
mean, Michael Thaler posting here about strategy acquiring another 15,355 Bitcoin at an average price of 92,737. You just told the whole world where you're at, right? So we're hearing reports from MSN that Uber will deploy thousands of autonomous taxis starting in Texas. That's according to MSN right now.
Nice.
Yeah, I look forward to the Uber driver not being an Uber driver. I look forward to them being a computer. Yeah, I think it's the future. That's what I'm saying. Don't bet on the past, bet on the future. What do you think the future is going to be? And I was asked that question the other day. Be the vision that you think you want to live in, right? If you don't want to live in this new world, then it's not going to be tough. It's going to be tough, right, for a lot of people. So, all right, look at that one. Back to 115 on Nvidia. Liking this here. Google has disclosed a 4% stake in ASTS. We've been talking about that for a while. It's all about the space race. When you got the big boys with the big money looking.
They pulled back a little ASTS after jumping on that news.
There you go. Right here. Boom. That should push ASTS up here a little bit. Apple's now down 4.6%. Like I said, I don't think so. I think Apple's got to prove itself here. They were very negative about the tariffs. I know there's a little bit of a bounce here, and this could be a good play if you're looking to trade. Yeah, there you go, a little bounce there. I can see that if you're going to trade, but
bounce back up into linear regression pretty nicely on the hourly.
Yeah. I mean, advanced decline now at 5,025. You got to like that a lot.
Absolutely. Netflix continuing to move.
They're now asking Polymarket, what's the chance of recession 2025? Now a 63% chance. You're a little late, boys and girls. You're betting on that because we're 0.3% down GDP. So we're already hitting that, right? So I'm telling people to be protected, right? There we go. Nvidia, come on, baby, let's go. Taking out 400 here.
Well, here's good news that I like. Lay's Tostitos to stop using artificial dyes this year to meet RFK Jr.'s phase out. Popular snack brands like Lay's and Tostitos will stop using artificial colors by the end of the year. I do think that is fantastic. World food prices increased in April, says the UN.
I'm just reading an article here on Twitter about the different theses of the Bitcoin target for 2025. Standard Charter says 200,000. HC Wainwright says 225. Cena says 135 to 285. BlackRock and Larry Fink says 700,000. FundStrat's Tom Lee now says 250,000. Anthony Pompliano says 250,000. Chamath Palihapitiya says 500,000. Van X says 180,000 with a retrace. 10X Research says 122, and GFO says 150. All of those are higher than what we're saying now, right?
Absolutely. Mexico's President Sheinbaum, Mexican-made auto parts are to have 0 U.S. tariff. So that would be good news.
The peso, let's see what the peso is doing right now. Dollar Mex now at 1958. Hey, I want to see. I'm about to go over there. I'm about to go to the Caribbean here, another cruise, believe it or not. Get that money up. Get that Mexican peso down.
Apple bouncing back a little bit here.
Yeah, I'm seeing the cues here pushing here a little bit. I'm liking this here. I had a feeling that Apple would bounce a bit here, but I'm just not a buyer. If you're a trader, it's probably an easy win here, but I'm just not seeing a place for me to like in this yet.
No.
When do we get back over 100,000, Howard, on Bitcoin? I'm really,
I don't know. Could happen this week. Pony AI up about 14.72% today. Duolingo up 13.35%. As Steve mentioned, AST on the news of Google's investment up 12.77%. Dexcom up 11.7%. We talked about Instacart, which is now called Maple Bear, up 11.57. FTAI Aviation up 10.94. So we got some really nice winners. Five Below we mentioned up 8.21. Riot up 7.34% here. I wonder if they had earnings today.
How about the two big winners of the Dow of the day? My two big favorite stocks, Nike and NVIDIA. I mean, it's like, that's it.
What it would be. Motorola getting hit pretty hard hit today, down about 8.73. Take-Two Interactive, Steve, getting hit about 8.29%. They announced they are delaying the release of Grand Theft Auto till 2026, maybe May. That's a huge, yeah, that definitely, my old roommate Alex is going to be really pissed. I don't want to talk to him today. He's going to be crying.
But you know what? When you play games like we do, get it right, don't get it wrong. I'm okay with that.
Yeah, but we're 5 years in already. Hologic up down about 7.4. I mean, they were literally 5 years in.
Well, hey, listen, Activision paused Titanfall 3, which I'm pissed about. I mean, Titanfall is one of my favorite games. I love that game, and I'm playing right now. I'm playing Call of Duty Zombies, right? I love that, and I like. For those of you who don't know, that's how I clear my head. I kill zombies. Yeah. So right now, Call of Duty is doing okay. Bada bang. What's up, Steve Flanagan?
iRhythm Technologies, a pumper here, up 15.78% out of nowhere, so to speak.
All right, get back up on 97,000.
Who's up today? Electronic Arts up, talking about gaming, up 6.4% here this morning.
Market Shark says time to stack up and buy the PS5. You're right. You know what? I have Xboxes everywhere on my house, and two of them went out. And instead of me going out and buying a new Xbox because Microsoft raised the price on all of the Xbox stuff, I said, you know what? I think I'll just wait then. Fine, I'll buy the Switch too. Then if that's what you're going to do to us, great. Screw you. So I agree with you.
I told you I've switched to basically using PC for most of mine nowadays.
You know, it's interesting with Microsoft now, and I like this. The gaming, right? I have I pay the gaming fee, and I can use my Xbox controller on my PC on my laptop.
That's what I mean. Yeah, I have mine right here, ready to go, and it's hooked up to my computer, and I've got my EA Pro. I play my Madden and my other side, more of the sports game side of it, and I play those right there on my computer.
Yeah,
I love it. Yeah,
and
you know, it's
literally
interesting
mine
because
on my desk too. So yeah,
I do think the future will be moving away from consoles and back into.
I agree. Yeah, I agree.
Into units, either handheld units like the Switch or PCs in the combination. Still liking what we're seeing here, Steve. It's moving up nicely here. Tick up 121. Advanced decline has come down a little bit. Q's holding up above that 486 area, almost 487. Everything's sort of stalled out. It hasn't really moved one way or the other, but holding up right here to me is a good thing. Bitcoin back above 97,000, so that should keep you happy for a little bit. You know, again, very healthy there. Everything looking pretty good.
Yeah, I mean, think about it, Howard. We bought at 72,002, right? That last big buy. And here we are at 97.2. So I'm pretty happy about that.
Absolutely. ASTS, that news getting back out here now, up almost 17% on that news of the Google's attachment to them.
There's that 0DT nonsense on NVIDIA right now. Tick down 300 now.
See a little bit of profit taken across Delta Airlines also, which had jumped up tremendously here this morning. Now up
oil getting back to 58, 58.40, 58.50 now a barrel. Ouch. We get down below this and it could be really bad here. I mean, people don't have a good feeling about the future right now. Euro now up 0.7% against the dollar here. I mean, the euro's beating us. We just talked about that this morning, right? The dollar is getting spanked.
Seeing NVIDIA getting hit here once it tried to break 115, broke back below it down to 114 again. So we are seeing some resistance spots still pop up here.
A big earthquake in Ushuaia, Argentina. For those of you who don't know where, if you don't know where Ushuaia is, that is the end of the world before you go off to Antarctica. Oh, wow. There you go. 114 broken on the NVIDIA there. Ouch. Lows of the day now in NVIDIA.
So, Steve, you know, the last two sort of laggards coming into fold, Charles Schwab sort of announcing their move into crypto. They announced they're sort of eyeing their crypto launch date. And then Morgan Stanley announcing that crypto trading is coming to E-Trade in the last 2 days. So again, as we see the adoption and the connection between TradFi and crypto continuing to increase.
I mean, we talked about this for 15 years now, Howard. I mean, you know, like we didn't really want to see the main players, banks, hugging on crypto now. We saw it. They hated it. They hated it. They hated it. Oh, there's so much going to go happen and the world's going to hate crypto. No, it's really not. It's just when they start to understand it, they'll start to adopt it. But those of us who are early adopters, we've been watching this game the whole way through. So, yeah.
And basically, Schwab CEO Rick Wurster told Yahoo Finance's opening bid, we're going to add spot crypto trading in the next 12 months. We're going to focus initially on Bitcoin and Ethereum. It'll be on our Thinkorswim platform. So that's big that they're going to put it through Thinkorswim. And then shortly after on Schwab.com and on mobile. Wurster did say Schwab has no plans to enter the meme coin trading environment. Those are the areas we'll leave to the side and let someone else make available. We're focused on those everyday investors that want crypto to be part of their portfolio. Schwab isn't the only old school investment firm eyeing a deeper role. Like we talked about, Morgan Stanley said they are going to add it through e-commerce, through E-Trade rather, excuse me.
Right. I mean, look, I don't like memes coins either. I mean, there's some I do like, you know, I like Shiba, but because I think they had things that they're doing, they're working on. But I don't really agree with this one. Unfortunately, I know where he's coming from, and I agree with that on that side of it. But unfortunately, people, younger generation, love their meme coins, and you know, you can't go against it. This is what I mean about investing, folks. you don't look. When I first started talking about Tesla and self-driving cars, I think people thought I was nuts, and Tesla's an idiot. Then all of a sudden, Elon Musk becomes the CEO of Tesla. Kaboom, boom, right? Off it goes. And the first thing that Elon Musk does is create a meme coin, right? So Doge, which now became a government entity, right? So when you look at it from that perspective, you got to say, okay, you don't know where this thing is going to go, right? Listen, a lot of cartoons became very popular things that Tony the Tiger became a cereal, right? So I get it, I understand it, but no, you really gotta be able to trade it. I mean, I hate to say it, I don't like it.
Yeah, I mean, and I would pull it up. Robinhood gets 43% of their total transaction-based revenue from crypto trading, and a lot of that is the fact that they are a place where you can get to those meme coins. What Schwab's going to do is they're going to win some market share from their existing client base that just want to buy some Bitcoin or maybe some Ethereum, but they're going to miss out on the crypto trading frenzy, so to speak.
Yeah.
Okay,
I had a feeling at the top was in. This was heavy put buying here on the SPY, so I'm not.
Okay, we're seeing tick down about 500. We're seeing a pullback big on the Qs.
People just don't believe this future. I mean, they just don't. But I think they're wrong. I think it stairs up, escalator down. I get all that. So just be careful out there.
Yeah, absolutely. And when there's big profits, you got to take some. Apple now down almost 5%, down 202.96. Not the lows of the day.
I just don't see Apple being a good one. Yeah, they're
and
just
Amazon
too heavy.
Now, well, and here's what's doing it. I mentioned this morning, right? What did I say? If Amazon goes down, the market goes down, and I don't mean that. I just meant it because such a big weighting on the Mag 7, and we knew that Apple was going to have a weak day. When you see a second one enter, and it tends to be it broadens the market.
The thing is, has anybody stopped buying from Amazon? Is AWS? I mean, we saw AWS numbers. Still things are going on out there. I don't.
Yeah, I mean, well, Steve, I think that's. I'd have to read more. I didn't read the forward guidance from Amazon. I'd have to see a little bit there what they had to say, because where I'm in the boat of is a lot of numbers look good today. Will they look good in 2 months?
And President Trump once again tweeted.
All this stuff came in before the tariffs. We know it, right? We know that Amazon, all these companies brought in, huge amounts of product to front run those things. So right now, no, there is no difference for Amazon and for these other companies. It's going to be,
right.
Will they be competitive in a month? And remember, I think the problem with Amazon there too is where a Best Buy knows exactly how much they bought to get ahead. Amazon doesn't buy themselves, right? It's their third-party sellers that bring stuff into the U.S.
Chatter just posted that Warren Buffett's the only top 10 billionaire with a net worth gain in the year so far.
I'd have to go back and find who it was that was bashing Buffett today and said he wasn't good at judging macro. Give me 1 second here. It was on CNBC. Lee Munson, from Portfolio Wealth Advisors president, said Warren Buffett is not good on the macro. He was wrong about inflation for 30 years. It's a tough time to go after Warren, don't you? I mean, he pretty much nailed what's going on. He had cash, but nobody else did. Ooh, this isn't good either. Pakistan Army resolves to defend territorial integrity. Pakistan's Army's top commanders meet to talk tensions with India.
Right now the tick is just holding in a linear regression. If you put tick on a 1 minute chart, linear regression, it's pretty much showing you what the markets are doing right now. And that's what I mean by the algos are in control. I don't think that zero DTEs are actually in control today. I think it's all algos right now. trying to walk this market back so they can buy back in. I think they're just wrong right now. They're a little bit late. Tick now at 50, now positive again here.
Yeah, bounce back up.
Silver and gold getting spanked again. Silver down to 32.19.
Like Steve said, on the advanced decline, it shot right up to the top of the linear regression on the minute. And now it's just flowing back down.
Yeah.
VIX is sort of headed upward, but we're going to try to see whether we can pull back down. Bitcoin couldn't hold that 97, broke back below it again. Seems to be the spot.
Yep.
Gold back above 32.46 here, but again, same thing. Looks very similar to what we just saw on Bitcoin. Volatility, but moving towards the downside more than the upside. WTI, wow, down to 58.12 here, Steve. Bottom of the linear here on the WTI. Seeing a big sell-off off of 5 below after that jump up too.
Yeah, Nvidia slipping again here. So it's this market just seems a bit weak here. I had a feeling the top was in this morning. I think thought that was it. No, is this knocking everybody out, and we're gonna once again push up? I don't think so, because I think the puts are just carrying the day right now.
Microsoft looking strong. Microsoft definitely the strongest of the Mag 7. Moving to the upside, just broke above 437 for a second. Tick negative 600 now, advanced decline now down under 4,500. VIX has risen back above 23 here. We see the Qs, the SPY, and the Dow now not up a percentage point. They're back in 2 basis points, moved to the upside. So we do see
we could see a pump here.
Microsoft, though, trying to run. I love what I see out of the Microsoft chart so far. I do see Mr. Flanagan's in. Let's talk to him about all the craziness going on with the
Get that boy in here.
Mr. Flanagan, how are you doing today, my friend?
Morning, gents, and wow, what an end of a week. Woo!
It is. You know, you texted me yesterday, DXY jumped through 100 again, was looking strong. King Dollar was back, but doesn't seem to want to carry on today.
Not yet, but you know, you got to watch this one carefully. This is the shake before the bake, or you know, I think the big news here is the U.S. and Canada. Look out below, and what does it present? It presents weekend risk. Normally, weekend risk is a big negative. Suddenly now you could have weekend risk the other side.
Yeah, you could there. You could there. I'm still worried about, you know, more of the stuff in Europe, Middle East, and Asia. This Pakistan and India getting sort of upset with each other is not helping things. The shake before the bake. I love it. Mr. Flanagan, so, you know, I have to ask, 10-year rising, 2-year rising, 30-year rising. Are we not cutting next week?
Well, there you go. I mean, that's on our agenda next week. Big week, right? You got the Fed, and then you got the Bank of England. Both of them sitting at 4.5%, and both of them better get in the game, because you know the UK is sliding fast, and ever since Brexit, you know, they've got to begin to focus on their economy, or you're going to see one of the shorter-lived, you know, governments in power. Remember, they can have their no confidence votes, just like Canada, which brings me to that. But the Fed, I think you're going to see 2 rate cuts on both of them next week. The Fed has ample reason to cut. I know, you know, we've been big proponents that they're way behind the curve, but you know, the GDP, slice and dice it. We talked about it Wednesday. It wasn't as bad as the Atlanta Fed had talked about, but I think there's ample reason for the Fed to come up with a reason to cut rates. The tariff situation, there's glimmers of hope. which is where I wanted to jump in on. Reports out this week showing the Chinese economy could lose upwards of 35 million jobs if this tariff situation is left untouched. UK manufacturing contracted for a 7th month in a row. And then the guy I love to talk about, Scott Bessent, he talked about the 10-year and the present Fed rates, but the little silver lining that he said, if the U.S. and China could rebalance together, that would be a big deal. That is the olive branch to China, that this is not a U.S. go it alone. And I think that is a significant, after he made that comment, suddenly China is now talking negotiations.
Okay, if you're saying, I mean, you're right. I hear that that's a great question, Steve. Okay, if China and the United States do start to talk, and we are seeing a little bit of ice thawing a little bit. China is now saying, well, if Trump is changing his tune, then we'll look at what he's saying, and then we'll look at the tariffs. But they're not the United States, right? If they lost 13 million jobs, it's so what, right? We don't care. Our economy is still growing at 5% and 6%. Xi Jinping is not up for an election. He's a dictator, pretty much. I don't see that happening, to be honest with you. I don't know. I don't think China cares. I think they, and I quote, say they're playing the long game, right? That, China and Europe is getting along. China and Africa, China and LATAM, China and Asia are pretty much getting along with trade. We're the only country not getting along with them, right? I mean, you say that, okay.
I'm gonna back up before I came on air and use a great comment that somebody, BigBeat, said about
there we go.
Forward investing, right? You've got to be looking at the horizon when you're investing. Okay, where are all the billionaires in China located? In the Politburo. They're all government officials. China is entrenched in deflation, and the grip is getting tighter. We saw what happened in Japan. 20 years, asset depreciation, it lost everything, right? The Nikkei went from its highs in the 90s and collapsed. They're not going to let that happen, Steve. They see the situation. They see the dire economics ahead of them. And, yes, he is the president for life, but they also have political unrest, and they don't want that. And China...
But China's different because China can go attack Vietnam. China can go attack South Korea. All the things that we're moving...
They force their people to either save or spend. I mean, with their digital currency, they make it expire. They give them a stipend. They give them not only do they give them a stipend sometimes, or a stimmy check, but then they say the stimmy check runs out in 14 days if you don't spend it. They have that capability, and they do it.
Yeah, but
China, that's what spikes their markets in a way that our markets will never spike, because their president can actually decide that.
Wait. Are you saying the United States never gives out stipend checks?
No, we can't force them to spend it. We can't right? We saw JP Diamond came on during COVID and said
we don't need to force our people to spend. They went to Apple and
of all times, right? We were at household savings. We're at the high of all times.
That's true.
Because the U.S. people, a lot of them actually saved their stipend checks. And what I'm talking about is one of the things that happened when they created the electronic CDY, and when they decided to make a digital yuan, is that they make it that it can expire, and they've done this already. They've used it multiple times in the past.
Yes,
where they say basically, we're going to give you a stimmy, but if you don't use it, you lose it.
Right, but China plays the long game.
Yeah,
the short game, I agree. War, everybody loses. China plays the long game. The long game is easy. There is a path for both of us to prosper. And keep in mind, the Chinese president has been educated in the U.S., as well as probably hundreds of millions of other Chinese have been educated and are very much skilled in Western ways. So I think look for the solution. That's what we should be looking. I'm a forward investor. That's how I'm playing this. To me, currencies, bring it in. Dollar index is telling me right here at 99.5 that we're forming the base. I talked about weekly closes. Well, here we are on a Friday, and last week's close was 99.59. The previous week was 99.08. I'm watching after punching out 100.40 on the high. I'm looking for a higher close. I think we're going to base here. I think we're going to see the dollar index close upwards and have 3 weeks in a row of higher closes. And that is telling me the bottom's in, the situation is churning, and I just need the sprinkle of a little fairy dust of good news, and we're off to the races.
Define fairy dust. Define me what the good news. What is it you want to see? Because I think the problem is that people can't I can't say what is the good news that I have to see. Is it Fed cutting rates? That'd be great news, right? It's actually bad news, right? Is it some unrest in Israel, and is it Iranian oil issue? Is it Ukraine? Is it China? I mean, there's so much bad right now that we're not used to this much bad. The last time we had this much bad was COVID. I mean, it's like, this is bad.
The shoe can drop anywhere here, right? I mean, and you're absolutely right. Geopolitics is massively out there while we're all focused on tariff. My sprinkle of fairy dust, here it is. Give me one trade agreement with a major industrialized country. That starts the ball rolling.
Yeah.
Give me, I mean, I think the United States is pretty clear now to Russia. Either we get this thing rolling or we're backing out. Now, we've signed a mineral agreement. What does that mean? Ukraine now has total security, right? Because we're going to be actually involved in an industrial agreement with the Ukraine. Russia now has to take what they've got, take their gains, and end it. They could use that as well as economic stimulus to their country that is not in the best of shape. Now, again, we're dealing with another political leader who can make these decisions on his own and doesn't have. But I think that the handwriting is there. The light at the end of the tunnel is for these leaders to say, you know what? The other path, peace, prosperity, takes away all the negatives that are beginning to build against the leaders, China and Russia. And I think that is where we're going to go. So, yes, I need one trade deal with a major partner, and I think then the ball begins to roll. I'm watching India, Pakistan. I'm much more worried about that one because we're two nuclear powers. I don't think that's been going on. I mean, yeah, the headlines are today, but, you go back.
Are you not worried about? Are you worried about Iran as well with as a nuclear power? You said that nuclear power.
Yeah, I mean, Iran is a big deal, but I think that the line in the sand is quite clear. You're not going to have a nuclear weapon.
I think that and I'm not saying it as a former State Department employee who worked in that desk, but I'm pretty sure they've got a nuclear bomb of some type. And
honestly, they will lose it. I mean, that's a bad thing for for our markets, but it'll be very short-lived. That'll be, probably a 3 to 5 day, and war that ends very rapidly.
Well, let me ask this question. That's a good point. I mean, with the United States during Obama administration, we sent them the Stuxnet, right? We hit them pretty hard in their computer systems that just pretty much rendered everything there useless.
That's right.
Do you see this happening again? I mean, this would definitely affect it. We're already seeing that affecting the oil markets here. So
yeah, and again, but the prospect that Iran is being offered is, hey, sell your oil to the whole world. Right. No more embargoes, no more problems. So, Steve, you can stay in political power forever. Your people are, we know Iran has got some obvious problems with its people. Every once in a while, there's uprisings that they have to quell. But you could take care of all that in a very simple stroke, right? Stop. Let the inspectors in. We don't want you to have, because if Iran has a nuclear weapon, Saudis will have a nuclear weapon too. And, it's not a bad road. It's a very bad road, I should say.
No, it's a very, yeah. I was like, no, that is not the
I
way.
want nuclear proliferation. I want nobody to have the bomb.
In a perfect world. Yep.
Yeah, it's not happening, right? We need more the Reaganomics. Okay, let's get right to it. The Dixie baby was up this morning and now down. It looks like it's near the lows, 99.51 here.
Somebody's flexing muscles, no question about it, Steve. Somebody's flexing muscles. The technicals are, could easily turn here in the dollar's favor. And there's no doubt about it that the one thing that happened overnight, I was a little surprised, but then we have to take the Japanese comment. He was asked about the treasury holdings, and he said, that could become a negotiating factor. Ooh, I would love to see Japan backtrack on that comment, because that is a big one. And I think that was totally out of line and will be retracted shortly. Why? Because Japan and the United States have a treaty, and the treaty is over the dollar. And I don't think Japan flexing that muscle is a very smart move at all.
I think a lot of the dollar selling off here is, with the 10-year now at 4.279, the sell-off on the U.S. bond market, that's denominated in U.S. dollars, obviously, so they're selling the dollars, right? I mean, it's what it seems. It's the bond market tied to the dollar than anything else, right?
Yeah, but Japan has over 2% of U.S. holdings. They're bigger than the Chinese holdings. And while 2% isn't a big number, it would be a significant number should they begin to sell.
But that's what didn't happen until November of last year when China started selling. So China had the majority of it, right?
China is in around the 800, 900 billion, and Japan.
Now, back in November, it was like 1.3 trillion.
That's
sold so much up, yeah.
And I believe when the tick data comes out in June, we'll find out that the reason bonds spiked in April was China unloaded a dump truck worth of treasuries.
That tide rolling out with who's going to see who's been swimming naked.
Yep.
Stephen, do you have any concern? I was reading an article, I don't know if you heard me talking earlier, about the fact that part of the issue we might see is that with our Fed not cutting it, especially if they don't cut this next week, that we start to enter, it's more of a deflationary help to the rest of the world, especially Europe and the ECB, who continues to cut at a strong rate, and especially if UK cuts. We're seeing this disparity that you've talked about between rates around the world, and that the U.S. would become less attractive to bond purchasers. I know that's more of a world you live in than me, so I was curious as what you thought there. They talked about the exit from Brexit that you mentioned here, and how that sent the UK's bonds just through the roof. No one wanted to buy them. Will we see that type of situation, or are we starting to see that type of situation of our Federal Reserve, of our central bankers don't start to cut rates?
I think you've already seen a lot of that move into the Eurozone. It's been an outperformer. I think their markets have outperformed ours by considerable amounts, because their central bank suddenly said, inflation? What inflation? Even if we look at the numbers today, April CPI was a little bit higher, but, it's still in the mid-levels of 2.5%. So, yeah, the Fed's got to be super concerned of that. The German CPI was 2.1%, so bang on to the 2% goals. And I think that's a good reason behind why the Fed is going to have to cut next week. 0.25% is not going to move the markets, but it at least shows some forward guidance on their part that they're aware of this situation.
But won't that, here's my thought. I don't think they're going to cut. I think that they're going to stick to their inflation narrative and then cut in June and say, look, okay, now we've got more data, because you keep hearing it from the Fed saying it's inflation. I mean, they've moved the goalpost so many times. I don't even know what the goalpost is. They keep saying, we have a dual mandate, and here's a dual mandate. Okay, well, if your mandate's inflation, guess what? That's abated. If your mandate is jobs are being lost left and right. I know this new job number came out, but they've lost the narrative. And now you got a president literally daily screaming on Twitter and through social, lower the rates, and you're seeing home prices start to fall apart. There's all these things that should tell the Fed to lower rates. 0.3% minus GDP. I mean, I can continue to go on and on and on. I don't know what else data point they freaking need. And yet I still think that they're sticking to their guns, right? I think you're going to see that.
Okay, so what's the end of every sentence? We are data dependent. Okay, Steve, you just went through a litany of data dependency right there. If you are data, look, they have a serious confidence problem in the market ever since Jalen Yellen and transitory, right? They have totally lost control of their assessment of the market. It is so important that they put their feet back down and say, hey, we understand what's going on, because I would say the three of us would say, no, you don't.
No, you don't. I was like, you beat me to it. Yeah, I was like, no, you don't.
So I think it's very important for them to say we are data dependent and we're in the zone of inflation's target, but our second mandate is beginning to build with some sort of priority. What is 0.25% going to do? What it's going to do is it's going to show that we're concerned and that we're involved. And we're not going to sit here and go, I don't see anything. Ignore the man behind the curtain. It's just not true. So I think that there's a lot of pressure on them to step forward and show the world, not the U.S., the world, that they are data dependent. And the data dependent is the world is slowing down.
Right.
But they say they're dependent. What data? Because they keep changing the goalposts. The data today is jobs. The data tomorrow is inflation. The data tomorrow, home. Even talking about home prices. They talked about oil. It seems political. This might be the most politicized Fed in history, maybe.
So I've been going through the data that I look at, and to me, it's so obvious that the data should be giving a 0.25% interest rate cut. And Steve, I said, okay, well, say they don't cut. Why won't they cut? And you put down inflation. Okay, but inflation is coming down. So then what is the reason not to cut? And then I said, can we actually say it's political? Oh, my goodness. If that's the case, wow, are we in a hurting? So
yeah.
That's what I'm saying.
Yeah,
I think there's some in there. I think we'd be naive to think there's no politics at play when it comes to that.
What are we in schoolyard ball here? You called me.
No, I'm not saying it's the right thing. I'm just saying we'd be foolish to think. I think that there isn't some, just by the rhetoric that both have had and the anger and hate they have for each other at this point.
You heard the Small Business Association, coming out and urging some tariff relief. It represents a huge swath of the industrial base in the United States, the small business. I mean, hello, Fed. What's 0.25% going to do? Is it really going to ignite inflation? Come on.
No, I know. Again, you're speaking to the choir here. We are both on your side with it. I think where the difference is, I don't think they're going to do it. I do think there are things in that room that are at play that aren't just based upon data and what's best for the government, for us right now.
Well, if they hold rates, then you've got the dollar suddenly as a higher interest rate currency, because I do think the Bank of England
at that point, right? Yeah.
The Bank of England has to cut. Now, I think that anybody sitting behind in the driver's seat of the economy, and we're in the back of the car, but anybody in the driver's seat has to see stimulus from oil. That's a good thing.
Yeah.
Right.
Stimulus from the lower dollar. The lower dollar is, while it can be good, wow. I mean, suddenly Europe is panicking over the strength of the euro dollar.
Right.
So,
because they have enough trouble selling their stuff.
I'm not happy. I gotta be over there in a month for a wedding, and it's like, whoa, I just got a 10% haircut here. Speaking of haircuts, I went to get mine yesterday, and on the minds of everybody was housing. I want to buy a house, Steve. Should I wait on my rates? And I think that the Main Street is waiting on these cuts, right? I think they're waiting on
the mortgage rates, monthly mortgage payment, and since 2020 has gone from 1484 to 2870 here. That's just insane. It really is.
And that's right, because COVID. I mean, and who wants to buy a house, sell a house to buy another house because the rates will go through the roof. You can't buy a better house, right? Because you're paying way too much.
Which limits the supply on the market because nobody wants to finance at a higher rate. So
but the problem, no, actually, there's a huge. It matters what state you're in. You're moving to a state that has a huge surplus in housing right now because all of Canada has their market.
Canada has left Florida.
Yeah, I mean, you look at certain states and they absolutely have an issue to that, where there's a large amount of inventory on the marketplace. Many parts of Florida right now, many parts of North Carolina, many parts of Texas, California. The other part is, even with all these places that were affected by the storms, no one can afford to have those homes insured again. So you've taken all those homes out of the marketplace for the regular world. They're only now available to the rich.
Great point, Howard. Do you think that Powell is aware of that?
He should be. Again, no one is banging a table harder saying we are behind on.
Well, again, here's another.
I'm just scared that he's not gonna. Again, we've been facing all of this for the last 6 months, and he's been turned into Janet Yellen and stick his head an ostrich into the sand and said there's no problems.
I watched Trump's comments the other day at his rally, and he's made a comment on the Fed. He said we have a guy in there who doesn't. But he said, but I'm not supposed to be saying
these. The guy that he put in there. The guy that he put in there.
We forget that fact, but he did. And he had a choice.
And Powell is a market man. He is from the marketplace. So I think, I'm forward thinking. I'm a forward investor. I'm looking. I see the light at the end of the tunnel. Yes, Steve, there's tremendous amount of events, geopolitical, etc., that are out there. Give me one trade deal, and I can begin to say the ice is thawing.
But I'm all for lowering rates. But let me play devil's advocate for 2 seconds. If we do lower rates, it is announcing that we are in a deflationary time period, which could say the big bad R word, recession, and it could be sticking it in the noses that actually bad news is actually bad news, and the reason we're cutting is because of bad news. We're not cutting for the right reasons to stimulate the economy, to get houses moving, to little small companies can start to borrow money better. I keep going on and on, right? Why we should have lower rates. And that's what Trump is saying. I want lower rates because I want to stimulate the economy, so that because our dollar is falling down. So will the narrative change again? Hey, why are we doing this?
You have to, if you are the Fed, the worst thing that you want, and I've heard you say stagflation a number of times. The worst thing you want is to have that recession term starting to gain a foothold. 0.25% is not going to hurt you from 4.5 to 4.25. You're still it
could start the ball rolling for quarter, 25 basis points each time, all the way out through December. So I think this will change the minds of Main Street and say, look, okay, the Fed's going to cut, so here's the time frame, and here's what we're going to do. They may not understand the 25 basis points and times 4, but it's at least changing the narrative in Main Street a little bit, right? I agree with Trump on this. No, I think he's
right. And it sets forward the market. Yes, the market is already pricing in 4 cuts now?
Yes, yeah, that's right.
So, he has to respond to the market or the data, right? That's what he keeps saying. If he doesn't cut next week, then what are you looking at? I think his questioning, it's going to be way too hot for the heat will be way too much. He's going to have to bail. But he
doesn't care. He's saying, I don't care. I'm not gonna be chairman of the Fed and at the end of the term. I already know that. He's already looking at several people to replace him. He already knows that. Powell knows that he's out. And he says he's staying till the end. Okay. I don't think he's bending to political pressure. I think he's really not going to do it. I think he's going to say no. And I think he waits till June to cut.
I agree. He's not bending to political pressure. The narrative will change. He is bending to the data and the markets. Markets are indicating cuts. The data is indicating cuts. Only thing he's holding on to from data is inflation isn't at 2%.
Right.
It's at 2.5, 2.6. Take your metric.
Tit for tat, 2.5, 2.6. Who gives a shit, right? Sorry, I shouldn't say that. I mean,
right.
That's the kind of where I'm at. Right? I'm almost at pound the table. I mean, I don't want to tell the Fed what to do. I like the Fed's independence. But we've been talking about this for years now, and it just seems now to get to the point now where it's starting to boil up a bit, to the point where it's like it has become political. That I'm not going to lower rates because Mr. Trump is being mean to me, and Powell is not doing it because, well, I don't need to, because I know numbers. Based on, I don't even know what he's changed the goalposts so much. I don't even know what data he's actually looking at anymore. Because I'm sitting here, I'm surrounded by screens of data, right? That tells me that, okay, pal, you've said this is the things that you need. You need inflation down. You need jobs getting, not adding to the inflation. We're seeing that. Yeah, I get the job numbers a little bit today, but so what? It wasn't even that much. And I think Howard and I talked about this morning.
Keep in mind that the backward changing of the former data makes it not an actual increase, basically.
Right. And a lot of it has to do with the government. I get that. So okay. So here we are, Steve, and we're affecting the dollar. The belief of other countries in our country is waning very fast. We're seeing them selling our treasuries. This is a really, and I've said it. I said it back in July of last year. Stagflation. And I think I heard so many people say that's the silliest thing ever. There's no way we're getting We're living in it right now. We're living in stagflation. Inflation is actually a little bit up, and people are losing their jobs. We're getting beat up both ways, and lowering rates might help Main Street a bit, at least change their focus on and how these small. The reason I'm getting upset is because the United States is not built on the backs of Apple and Microsoft. Yes, we look at those companies, but it's small business, and they're the ones that are hurting the worst. And I think that's what we talked about that this morning. That I was asked yesterday, what should I invest in? The SPY, the QQQ? I said no, the Russell, because the small businesses will come out of this, and they're always the ones that get us out of these problems. So why is the Fed not listening to the small business people saying, hey, you know what? I want to help you out too. Like, it's not about President calling Tim Cook and saying, please move manufacturing back. Lower the rates so that small business can get some breathing room a little bit. Am I wrong in this period here?
You're not wrong. And you basically, hey, you see what's going on, Fed. How about participating with this transition, this economic transition that we're trying to do? Right now, Main Street could use a little crumb here. Give us a quarter. Show us that you're involved in the transition to a more domestically led economy that creates more jobs here. It's not going to be a signal. And Steve, the bigger issue is if you don't move. Howard, you brought up that report about money moving into Europe. You've got a central bank over there that's now talking below neutral rates, which is good for their investment market. And now you're going to have a Fed that doesn't cut and says, we're watching inflation. The heck with all you people out there. That's not a good thing. If that leads to more treasury selling, you are going to have so much bigger problem on your hands.
We might have to change the dollar from the faith and credit of God to instead of the United States, right? I mean, this is getting. I don't want to be on my high horse here today because it is Friday, and I don't drink coffee, as everybody knows. But they have when we looked back 3 months ago, and we looked at the ECB and Christine Lagarde, she had stuck her head in the sand for many months.
Yeah.
And you know what she did? She stuck with Janet Yellen. And when they realized, wait a minute,
good one.
Janet Yellen's not my friend anymore. She's no longer in power. So guess what I got to do? I better lower rates. Better do it quickly. And she did it, and she got smart. And look what's happening. Money has moved to Europe.
And who made the comment like 4 months ahead of that change? Mario Draghi, former ECB.
Yep. For those who don't know, the Mario Draghi, the Italian president in the ECB. So yes, we know it works. We know what's happening. We saw. Look. The world could have fallen apart during COVID had two things not happened: lowering rates to nothing, and stimulus checks. Right. So China sends out a stimulus check and they lower rates. We see what's going on with economies of other countries. Why can we not understand this? I'm not advocating us printing money because I think that's not good either. We need to have a balance and burn some more cash. I think we should burn more because if not, we're going to have a Dixie under 95 soon. But you're right, Stephen. I don't know. I don't know what else to do instead of maybe you and I going to the Fed, knocking on the door of the window and saying, hey, let me in. I want to have a chat with you guys. Right. I don't know what else to do. I mean, maybe I can put Federal Reserve on the Twitter feed so they'll listen in onto it. Right?
Well, I think better days ahead. I think next week will be a positive week. Why is the dollar selling off? The dollar's selling off because of exactly what we're talking about. I don't know what the Fed's going to do. Are they going to be political? Why won't they cut? And I think people are saying, you know what? I had a nice little move off the lows. We've had 2 successive weeks, higher closes. Let me take profits, get out. I'll sit. Dixie's back up to 99.55. We're closing in on the 99.59, which was last week's close. I do believe we'll close higher. We'll have 3 weeks in a row. Then next week, you get the positive news. I think the Fed's going to come out. I do believe they cut. I think they have to cut. I think they need to show the world they're in charge. They need to turn their narrative around, just like you said, Steve, as using Christine Lagarde at the ECB as the example. That's my prognosis. That's the way I think. My forward thinking into next week is looking. Fed and Bank of England both make cuts from 4.5%. The Bank of England could be a bit more aggressive at 0.5%. But that's the way I see the week shaping up. I think everything is, even the payroll numbers, while they were decent, and you did see the U6 drop to 7.8% now, which is the one I watch. There's significant data out there for the Fed to give a little bit of a tweak.
Shake and bake, Flanagan. There it is, man. I love this.
Today's shake before bake. Yeah, there we go.
I will say we do have next week is the busiest week of earnings. Also, to keep in mind, there's over 3,300 companies reporting, and none of the Mag 7 really, but then there's a lot of big ones. Your Palantirs, your Fords.
And Howard, when is Buffett's earnings? Berkshire Hathaway
next week.
The only billionaire, the top 10 billionaires that actually made money this year. Interesting. He knew what was going on.
Did they deploy some of their cash?
That is going to be the question. That is going to be the question for sure. Is going to be, did they do that or did they not? That is going to be the question that everyone is on track for, and that is up for Monday, by the way, Monday morning.
Okay, that's
going to be Monday after market. He does after market, not before.
Well, I know one thing. We pushed up the Bitcoin. There you go. Flanagan, shake and bake Flanagan.
Well, everything's moving up. I do have to say before we leave here, QQQ did break up above 488 again. Yeah. Retracing from that 488 level, so that would be the spot I'm keeping an eye on today. Same thing with SPY, 567 seems to be the top where we can get to. It's actually 566.50, so keep an eye on that. Any break above those, though, I think we skyrocket into the end of day. Watch for some profit taken out there, everybody, and have a fantastic weekend. Thank you, Mr. Flanagan. Thank you, BigBeat. We'll see you again Monday morning, everybody.